Hello, in this video, I'll be demonstrating to you on how to depreciate machinery using the reducing balance method. When you see this kind of question, you need to take note of how many machineries that the company has. So here we go. Tanaka operates a motor shop, TAK Limited. The following balances appear in his books on 1st July 2013. So this is actually the date, the starting date of the financial year. And existingly, there is one piece of machinery that costs $100,000. This is not a new piece of machinery because it has already been depreciated quite a fair bit. So the total depreciation to date is $45,000. In other words, its net book value right now is only worth $55,000, where you take $100,000 minus $45,000. Due to business expansion, TAK Limited purchased machinery valued at $50,000 from KO Private Limited on 1st January 2014. A check of 10% deposit was paid. That means $5,000 was already paid up front. And the remaining amount is to be paid over 5 years. So this is the credit transaction portion, meaning the remaining $45,000 has to be paid later on. The depreciation policy that the company has is on the net book value, meaning depreciation of machinery at 10% on the net book value, and the questions kindly mentioned that the method to be used is reducing balance method. Now before we even answer part A, B, and C, let's map out how the machineries come into the picture. Since the question asks you to prepare for 2 years, 30th of June 2014 and 30th of June 2015, I'm just going to do in a small little table format. Okay, with this format, we will be mapping out the two machineries. We call them machinery 1 for the existing one, and machinery 2 for the new one that was bought on 1st January 2014. So here, for the first financial year, we are calculating how much depreciation was done for the first machinery. For the first machinery, it already has a total depreciation of $45,000. And by the way, the formula for reducing balance method is cost minus accumulated depreciation, and you multiply it by the rate. So here, to calculate depreciation in the first year, we're going to use the cost, 100,000, we're going to minus away 45,000, and we will multiply by the rate at 10%, giving us the amount of 5,500. So that is for the first machinery. And what about the second machinery? Will it have depreciation in the first year? Notice that the second machinery only comes into the picture on 1st January 2014. Now on 1st January 2014, that means it came into the picture sometime within the first financial year. It is before the 30th of June 2014. So we're going to take the cost, which is 50,000, and there's no accumulated depreciation for machinery 2 because it is a new piece of non-current asset. Therefore, we're going to multiply it with the rate 10%. However, do not forget to multiply by the number of months that it existed in the business. From January until June, that is as much as or as many as 6 months out of 12 months. So this will give us the amount of $2,500. Sometimes a question will tell you that depreciation is charged in a full year, regardless of when it is bought. So a full year depreciation is charged in the year of purchase. If that happens, then you do not have to prorate it. This question didn't mention that statement, therefore you are required to apportion it. Next, we will be calculating the depreciation amount for the second year. So in the second year, the total accumulated depreciation would have increased to become 45,000 plus 5,500, giving us 50,500. So we're going to take the cost minus last year's depreciation, accumulated depreciation, and minus this latest depreciation that we had done before you're multiplying it with the rate given. So here we have 4,950. Now please check that the amount that you get will actually be lesser than the previous year's depreciation, because this is a reducing balance method. Likewise, for your machinery number 2, you will actually take the cost. This time around is 50,000 also, but now you have to minus away the 2,500 because the total accumulated depreciation right now will be 2,500, and then you times by the rate. There is no need to apportion anymore because the machine would have appeared in the business for the full year in 2015. So getting the amount will be 4,750. Now don't be surprised that this time around the amount is higher than previous year, because previous year we only had the equipment for 6 months. So with these calculations, we can now prepare the accounts more comfortably. So the first question asks to prepare the machinery account itself. So whenever you see the word account, it means that you're supposed to prepare the ledger account. So your format has to be in a correct way. It must be debit, credit, and balance. So you will have all this. So here, for the machinery account, it will only include the original price of the equipment. So here on 1st of July 2013, existingly it has got one machinery. So we are going to write balance brought down of the amount 100,000 debit. Why debit? Because this is an asset account. Therefore, it is a plus minus account. Next, we bought the new machinery in 2014. That is still the same financial year, but in a different calendar year. So we're going to write on January 1st, we buy the machinery, but because we bought it using cash and on a credit basis, we're going to write the cash at bank first. We increased by $5,000. Show your workings as to how you got the amount times 10%. And the other remaining amount, 45,000 that you owe, you're going to use other payable and not trade payable because this is not inventory. this would be 45,000. So here we go. So once this is done, don't forget to have a closure for the year 2014. So here we end on 30th June. We have a balance breakdown of 150,000. But that's not enough, because you're asked to prepare the machinery account for 2015 as well. So this is not 30th June, this should be July 1st. Your balance breakdown must always be on the first day of the next financial year. So because nothing else happened in the second financial year, we will actually bring forward the balance again. And the amount will be 150,000 also. Okay, I will proceed in the next video as to how to answer part B and C.